Hey everybody, Boris, let's speak at Forex. Welcome to the weekly technicals for the crosses for June 17th to June 21, 2019. And this week I'm really trying to trade some recovery trades in the pound and the Aussie, weaknesses in the euro, which I think could persist, and the sort of best of the worst in the yen cross, because I'm bullish yen, or I'm bullish dollar yen, so I think yen crosses have a chance to come back. Let's take a look at what I have in mind here. So first, Euro Aussie. This is really much more of a purely technical trade because on the charts, it looks like it's fully exhausted this 164 level. If we get the euro breaking through the 112, we have a reasonable chance here to kind of break all the way down to 162. So I don't have any funda-driven trade here. There is a little bit of a risk in front of the RBA minutes, which we're going to have Monday night, which will be Tuesday to you guys. But apart from that, I don't anticipate the minutes to really deviate much from the statement. So I don't think there's going to be much of a variance here. It's really just a relative weakness trade. I think the euro is going to show a little bit more relative weakness as we go forward. Euro pound, on the other hand, I think is setting up as the cleanest, clearest trade because here you have a combination of technicals and fundamentals that could work our way. Certainly, when I show you the charts, you'll see that the 89.50 is become a very clear exhaustion move. But more importantly, in some perverse way, as I was mentioning in the other video, the fact that if Boris Johnson can win unopposed, and you have sort of a clean Tory united front, it provides, remember, Johnson is not a hardcore isolationist, and since he really wants to create a deal, he does want to negotiate something. He certainly if he does negotiate a deal, he looks far more formidable as a leader for all of UK for more than just a week. And he has a lot of, I think, he's not an ideologue by any means of stretch imagination. So I think the market is going to view that as actually a positive resuscitation of the idea that a hard Brexit is off the table. That provides that natural euro-pound weakness or the pound strength. Also the fact that, of course, I think euro-pound is really grossly overbought after all these weeks. And then the last, again, this is a trade on sort of the least weakest of all, which is caddy. I like the yen cross. I generally like dollar yen, period. But if you're going to trade yen crosses, there's nothing on the charts that looked especially compelling. But this does look better because it is hovering above the lows. Let's take a look at the charts here, and I'll show you exactly what I mean. So here's first Euro Aussie. Here we have not just the exhaustion move here last week against the 64 high, but if you notice, this is, if you just ignore the spike move here, this is essentially a triple top formation. The 64 has been a pretty significant resist level for quite a long time back, and therefore provides us with a modicum of confidence that we have some further downside action to go. This flame out move here today on the essentially what is not quite a shooting star, but a kind of a doji formation is giving us scope here. Plus, there's plenty of room here all the way down to the SMA to make this thing work. Therefore, I like this on a technical basis as a trade. Euro pound, let me just pull that up, just bear with me a second. Similar kind of idea in a sense that we have lots of wicks. Basically, the market is just exhausted up above these levels, can't seem to really push the pair above here. But as I said, we have the possible fundamental catalyst here that could push us down. That is, we could have some rally in the pound that could take us right back. Also, similar kind of a story here in a sense that we're hovering above the SMAs. That gives us the scope for mean reversion, even gives us scope for mean reversion all the way to the 500 to come back and touch us around 88. Furthermore, if you look at the slice of the move here, this has been a very, very strong move since the start of May. We have not had any reasonable correction of a figure or more, and a correction of a figure or more is certainly due. So, certainly due are the famous last words in trading, but you got to trade the best probability you can. Given the setup right now, and given the possible funded catalyst, I think it's a pretty decent trade, and I like it from every angle. And then finally, let's take a look at the CAD yen. And here's the CAD yen. It looks negative, no doubt, but the thing is not as negative as all the rest on the yen front. Also, we are still above the near-term lows at around 80. It is essentially basically an 80 support, 82 resistance level. Here it's a question of whether the caddy can kind of get out of its own way. If it just simply stops falling, the yen cross itself could pull us up here all the way, perhaps all the way maybe to 81.50, 82 on the resistance level. But it's clearly a punt because technically you don't have a clean setup here. But one of the notorious things about these particular crosses is they very often lie on the charts, right? I mean, something that looks really, really bad is actually just simply nearing, or even something like this, where it just touches the 20 SMA, looks kind of horrible, and is essentially a support level that bounces back up and moves forward. So I'm sort of betting on the perverse action in the Canadian dollar, in the sense that what's bad looks good, what's good looks bad, along with hopefully the tailwind of dollar yen catching that bid towards the 109. That's how the week shapes up. I wish you guys the best luck, the best of trading. Boris Schlossberg, over now.